This conference will now be recorded.
Okay, till income statement we have finished and we had solved the debt schedule also. Now we have to do the balance sheet. So balance sheet. So do we know the cash, this one? Girls? So till now we don't know anything about the cash. So for time being, we will keep this one on a hold. Okay. Okay, now we have to calculate the asset side of the balance sheet. So here, when we are talking about the PPE gross, so what is the gross amount? So gross is 75 lakh. And every year the value remains the same. So we'll take the same value. Not visible. Okay, 1 second. Now, ma.
Yes, ma'am.
Yes, ma'am.
Okay, so now we don't know what is the cash value. For time being, we will keep it on the hold. Okay, later part we'll calculate the cash. So PP, the gross, if you see, so is equal to 75 lakh. So every year the gross is going to remain the same. So I'll take the previous year value. I'll select and I will drag it till the last. Okay. So here now we have to calculate the depreciation. So depreciation at the beginning, we'll be having any depreciation. So the here when we have purchased, that time only we don't have any depreciation. So the value will be 0. Okay. So next year onwards, there will, sorry.
What is PPE?
The gross amount, whatever this one we are starting up with this one, no, the value. So that is gross amount. So PPE and gross is one are the same only. You are asking for the full form. So here when we have to calculate the depreciation at the year beginning, there is no depreciation value. So in the first year, it will be the previous year value plus the depreciation, what has happened. Enter. So I'll select and I will drag it. So the net income will be is equal to gross minus the depreciation. So I'll select and I will drag this. So total assets will be is equal to, so the cash amount, till now we have not yet known what is the cash amount, but still we will take that for consideration. So cash plus the net amount. So I'll select and I'll drag till the last. So till here you people are
depreciation part again.
So depreciation, if we see for the first year, there will be no depreciation. As we purchase the first year, no depreciation will be calculated. So the value will remain 0. Okay. And then from the first year, the depreciation will be added up. So added up in the sense is equal to whatever the previous year value is there, depreciation value plus. Here we have the depreciation calculated. So previous year plus the depreciation value, enter. So I'll just click here and I will drag it till the last. So understood with this? Let's go to the liabilities. I want you people to try out this one in the meantime. Girls, are you people able to do this? Is there any confusion or something? Girls, any doubt? Are you people able to solve it? Why no response, girls? Okay, Aditi is having some network issues. What about others? Are you able to get it, girls?
Yeah. Yes, ma'am.
So done. So let's move to the liabilities. Okay, now let's start to solve this liabilities part. So debt, if we look at what is the debt value is equal to, it will be the PPE net, that is property, plant and equipment. What is the net means after the gross, after the initial investment was 75 lakh. So when it is subtracted with the depreciation, we are going to get the PPE net, that is property, plant and equipment. So it is one of the thing amongst it. So this one, we'll take it here and we will just drag it. Okay, debt amount means after the depreciation, so the remaining value. So equity how much we have calculated. So 75% we have planned that we will be taking a loan. So if we remove 75% means 25% will be the equity, is equal to 75 lakh into 25%. This will be my equity and this is going to remain the same throughout the year. Okay. So debt you people understood, right? So whatever the PPE net, that is the initial investment, when we remove the depreciation from it, we will be getting the PPE net, that is property, plant and equipment net value. So that net value is going to come under the debt. Then when we are calculating the equity, so equity will be out of 100%, they are telling that 75% will be loan, isn't it? So loan will be 75% means remaining 25% will be my equity. Okay, so retained profit. So initial years we don't have any retained profit in this. So next year if we see is equal to D52, that is retained profit for the first year plus the profit after tax. So this will be my retained profit. I'll just select and drag. Okay, so the total liability will be is equal to, so the debt amount, that is 75 lakh plus equity plus the retained profit. So I'll just select and drag this. Understood with this? Or you want me to explain it once again? Girls, why no response? If you interact, then only I will also feel energetic in teaching you. I know it is a long day. You had come back from your college tired, and I think most of them might be having your exams going on. It is really hectic. We'll finish it fast. If you are attentive, if you are asking questions, reverting back.
Can you explain retained profit once again?
So retained profit, first year, retained profit means what is the profit that I have got. So first year, there is no profit as such. So I'll keep it as 0. Okay. So the next year when we see, so here we have to calculate the retained profit. So that will be is equal to the previous year retained profit, whatever you have got, plus the profit after tax. Okay, so this will be your retained profit. So the first year you have got the loss, so there is nothing profit you have got it. So I'll select and drag till the last 4 year. So this is how we'll calculate the retained profit. And here to calculate the total liabilities, is equal to D50 plus D51 plus the retained profit. So debt plus equity plus the retained profit. So this will be my total liability. So now it is not matching because till now I have not put the cash value. So if once I put my cash value, then I'll be able to know whether my assets and liabilities are matching. So solve the liabilities part. We'll go to the cash flow statement. Sorry girls, here I have made a mistake in the debt amount. This will be actually here, the debt schedule, what we have calculated, no? So by the end of the period, what is the debt value I have? So I need to take that. So I made the mistake over there. Here the debt value I have to take from the debt schedule. End of the period, what's the debt amount that I have at the here beginning? I have to take that. It was not PP in it, sorry. Are you girls able to solve the liability side of the balance sheet?
Yes, ma'am.
Is anybody having the doubt? Girls, shall we go to the cash flow statement? Is everyone done with the assets and the liabilities part? So now let's calculate the PAT. So PAT, profit after tax. So at the here beginning, so there was nothing. So I'll just click and drag till the last. Then the depreciation is equal to, so here we have calculated the depreciation. So we'll take this value and we will drag this till the last. So cash flow statement. So for the first year it is nil, nothing is there. Then capital expenses, that is equal to, So PPE gross, that is property, plant, equipment gross. Sorry. So we were calculating the capital expenses, that is first year minus the second year value. So that is my capex, that is capital expenses. I'll come here, I'll select and I'll drag till the last. So cash flow for investing. So whatever the capital expenses that was there, so I'll take that value only. So I'll select this and I will drag. So capital expenses, the capital expenses what we have spent, and the cash flow for investing, because we were not able to invest any amount. So we have taken the loan. So this will remain the same. And debt amount. So debt amount we have taken here. So I'll take this value. D50 minus, sorry, is equal to D50 minus the previous year value. So I'll just take this, select and drag. Then equity in addition is equal to, that is equity minus previous year equity value what it was there. I'll select and drag. So cash flow statement is equal to sum of open the parenthesis D66 to D67, that is debt plus the equity amount. Let's select and I will drag.
Ma'am, can you explain it
Then,
again?
which one, ma? Cash flow statement.
Yes, ma'am.
So cash flow statement will be is equal to sum of equity amount, debt amount plus the equity amount. Enter.
Ma'am, the whole cash flow statement.
The whole cash flow statement. Okay. So I have to take the PAT, that is profit after tax. That will be my net income. So I have to take the value of PAT. Okay, first here there is nothing. So I'll just select and drag it. Okay, now depreciation is equal to my depreciation value. So initial here. So there also we don't have any values. I'll select and drag till the last. Then cash flow statement is equal to sum of open the parenthesis. So net income plus depreciation.
Ma'am, why do we add depreciation?
Sorry,
Why do
can
we
you tell
add
it a little
depreciation?
bit? So we need to know the net cash flow in the operation, whatever the cash flow that has happened. No, so initially when we see for the first year, there is no net income nor the depreciation is there. So when we come to the first year, there is no profit that has happened, and the depreciation what it has happened. So I'll come to know what is the actual cash flow that has happened for the year one. Thereon it follows. Understood? So capital expenses is equal to, so that will be PPE gross, that is property plant equipment gross minus the current year's value. So that will be my capital expenses. I will just select and drag it till the last. So initial here I have spent 75 lakh. After that there is no such expenses that has happened. So cash flow for investing. So that will remain the same. So sum of, open the parenthesis, capital expenses. What is there? So I'll select this. I'll select and drag. So understood till here? Okay, next we'll go for debt amount. So debt amount will be, so D50, that is debt value for the year one minus the previous year value. Enter. I will select and drag. The first year value minus the previous year value. So equity addition. So that is equity for the first year minus the previous year. That will be my equity addition. I'll select and drag. So cash flow financing is equal to sum of, open the parenthesis, so debt plus equity. So this will be my cash or financing. I'll select and drag this. So net change in cash. So net change in cash will be is equal to, what is the value? Cash flow from financing plus cash flow from investing plus cash flow from operations. So when we were calculating the cash flow statement, if you remember, CFO, CFI and CFF. Remember? Previous case study and all, we have done cash flow statement where we had calculated in order to know the net cash. So it is CFO, that is cash flow from operations plus cash flow from investing and plus cash flow from financing. So I'll select and I'll drag till the last year. So cash at the beginning of the period. So beginning of the period, we don't know how much cash we were investing, and end of the period also we were not knowing what is the cash amount. So it will be, for the first year it will be is equal to the end of period, whatever the value that I have at the end of period will become the beginning of the period value. So I'll select and I will drag this. So now I have to calculate the end of the period is equal to, so whatever the previous year's beginning of the period was there plus the net change in cash what I had. So I'll select and I will drag. So my cash at end of the period is this much. Excuse me, girls. Girls, understood till here? Any doubts? Girls?
Can you explain equity addition?
Equity addition. Okay. So equity addition. So equity addition will be is equal to equity, whatever the value we have got. So for the first year minus the previous year. Enter. So when we are adding it for the upcoming years, this will be my equity amount. So only the first year I'm getting the equity value, that is 18,75,000. For the next years, we don't have any values. So equity value, what we have calculated in the balance sheet under the liability side. So that one, see here, is equal to equity, the year one minus the previous year's equity value, what we have. And that has to be dragged till the last. So now we have come to know what is the cash that we have by the end of the period. So the same value I have to take it in the balance sheet on the cash side is equal to, so cash at the end of the period. So I'll select this and I will drag it. So now you can see both my assets and liabilities, it is matching. So if I give checksum is equal to asset minus the liability. So understood till here? Anybody is having any doubts?
Ma'am, can you one show capital expenses?
Capital expenses, huh? So is equal to 244. So that is the value, the PPE, what we have, the gross PPE, that is property, equipment, gross amount what we have minus this year's value, previous year minus the current year. So that will be my capital expenses, and I'll just select and drag.
Ma'am, that one was already year zero value.
Sorry, this PPE gross. Yeah, previous year, whatever the gross value I have. So I have to subtract it with the current year. So previous year minus the current year, I'll be getting my capital expenses. When I select and drag, I'll come to know what is the capital expenses that has happened throughout that particular period of time.
And why are we subtracting, ma'am, here?
Because here whatever the value I have got in the current year, isn't it? So the previous year, whatever the gross amount what I have invested, and on top of it what is the investment that has happened this year, when I subtract this, I'll be coming to know what is the capital expenses that is happening for the current year. So this year's investment minus the previous year investment, so what is the expenses that have been raised year after year. So when we see this, the investment, whatever we have done, 75 lakh, what we have spent in order to buy the bus. So that remains the same. There is no such extra expenses that has happened throughout this 5 years. Last year I have spent 75 lakh. So this year also it is only 75 lakh. There is no any such additional expenses that has happened. So that is why when we subtract the value, previous year value with the current year value, the remaining value, when I subtract the value, what I get, I'll come to know this is the expenses, additional expenses that has happened from previous year to this year. Understood with this? So now when I have calculated the EOP, that is end of period, when I come to know. So the same amount I'm going to take it in the balance sheets on the asset side. So the cash what I am supposed to enter, that value I'll be taking it here is equal to, that is end of period, whatever the value I have got. So I'll just select and drag it. So automatically my total assets and liabilities both gets matched. So let's go for the free cash flow equity. And here this escalation rate, what it is given, that is for the actual case study what I have given Noma. For that it was. So here we will ignore this part and we will calculate till the IRR. Okay. So here we have to know the actual net income is equal to. So the net income was, so profit after tax. So I'll select and I will drag till the last. Now the depreciation is equal to, take the depreciation value. Sorry. Then capital expenses. $63. So capital expenses what we had, and debt repayment. So the values we have already calculated. We have to choose the values and put it under the free cash flow equity. Okay. So now is equal to sum of, open the parenthesis, select the range. So this is my cash flow to equity. I'll select and I will drag. So now I have to calculate the IRR for this one. So that is free cash flow equity will be is equal to, I'll select this value and I will select and drag. So now I'll put the function of IRR is equal to IRR, open the parenthesis and select the free cash flow for equity value from here 0 current year to the here fourth year. So it will be IRR will be 26.73. So any doubt in this? I want you people to try it out. If you are still having any doubts, please get it clarified. Girls, any doubt in cash flow statement?
Ma'am, debt repayment insurance.
Debt repayment. So here debt repayment will be, so the debt value, whatever we have, so that value minus the previous year, whatever the debt value it is there. So that one, when I subtract together, it will be, we will be able to know the actual year's debt amount, which will be the repayment. So here I'll just click and I will select and drag. Okay. So here when you see the debt amount, it is file 56 lakh 25,000 is there. So this is the debt amount what I have. So year on year, how much I am going to pay. So repayment means I am paying them back. So here after here, how much I am going to pay them in order to complete it within the next upcoming 4 years. So for that, I'll be taking the actual years, the year one's value minus the previous year value what I have taken. So the remaining amount, it will be carried forward to the next year, where whatever the amount I am paying, it will be repaid. The debt amount in the year beginning, so it was 56 lakhs 25,000 was there. So out of which, for in the first year I have paid 11 lakh 26,000. So when I subtract the value with the previous year, I'll come to know what is the actual amount that is remaining. So as we know, they had been told that you have to pay 20% or in the lump sum. So year after year, we are paying this much of amount, and they have told very clearly that by the end of the fourth, we are giving you the tenure of 4 years. So in this 4 year, you have to finish it. So year after year, when I was paying the remaining amount, whatever it is there, we are going to pay it and clear off the debt amount. Is everyone able to solve the sum?
Yes, ma'am.
Okay. Why today everybody are so quiet? Or else you people used to interact so nicely. Today the class seems to be very boring to me. Okay, free cash flow equity. So you have to just take the values which are already been calculated and put it under this.
You did it again.
Girls, understood with the sum? Okay, I'll share the solved one. You people try it out. If you are still having any doubts, we'll clarify it tomorrow. Okay. I hope today you people are not in the mood. Everyone are very quiet. No, still also see no response only. Okay, we'll
Okay,
take
ma'am.
the.
We'll solve and get back.
Okay, so we'll take the attendance in the meantime. Saida,
Present, ma'am.
Trisha, Trisha, if anybody is not able to communicate, please put it in the chat box. So Aditi is having some network issue, I believe. Okay. So Trisha is present. Harina,
Present, ma'am.
Nivedita,
Present, ma'am.
Janet,
Present, ma'am.
Sirisha,
Present, ma'am.
Pooja,
Present, ma'am.
Deepti,
Present, ma'am.
Mansi. Okay, Mansi is present. Okay, Achisha, Achisha, Tanisha,
Present, ma'am.
Shreya,
Shreya, present, ma'am.
Pooja,
Pooja, present, ma'am.
Prabjot,
Present, ma'am.
Bhumika,
Present, ma'am.
Aditi, present. Triveda, Trisha is network issue. I have marked present, ma Trisha. So Triveda,
Present, ma'am.
Triveda, you were present on 22nd, 23rd, last
Present,
Friday.
ma'am.
You are present on this 2 days also, Thursday, Friday.
Ma'am, I was absent on Thursday and Friday, ma'am.
You are absent. Okay, fine. Hannah,
Yeah, ma'am.
Hannah, okay. So I'll share the solved one, what we have done. You people try it out. If you are still having the doubts, we'll clarify in the next class tomorrow. Okay. So tomorrow we'll be having the last, this one case study. After that, we'll be having the revision classes. And on Thursday, you'll be having your exam, girls. So try to practice all the things. So if you're having any doubts, we'll solve it on
Me, ma'am.
Wednesday. Yes, ma.
Ma'am, do we have the exam on